As 2015 draws to a close, I wanted to wish you a very Merry Christmas and spend a couple of moments reflecting on the investment year that was and also what our outlook is for 2016. It's been a very challenging 12 months for investors, and investor sentiment has almost universally been negative across the course of the year. That's interesting considering that while the Australian market will be down over the course of the 12 months, Australian investors who've had the courage to invest overseas have been strongly rewarded in Australian dollar terms. We expect that to continue over the next 12 months. And in fact, we spent some time with Morgan Stanley's senior analyst over the last couple of weeks. And they've been revising down their outlook for the Australian dollar. At this stage, they're expecting it to trade as low as 62 cents. That's partly because they think that it's almost certain that the US Federal Reserve will raise rates this December and continue to do so with 4 25-point increases over the subsequent months. In addition, they think that there's 1 or 2 25-point cuts that are likely to happen to the RBA cash rate here in Australia. And it's that interest rate differential that's likely to drive the Australian dollar lower. That means that we should continue to embrace diversification. As you've seen the impact of falling commodity prices on quality companies like BHP Billiton and Rio Tinto, it's a testament to why diversification is so important. So we'll be continuing to talk to you about why having a spread across asset classes is essential, particularly as we see the Australian property market looking to start cooling, and as we see major trading partners like China continue to have domestic economic challenges which will have flow-on effects into the Australian economy. The technical signs for markets don't look terribly positive. Having said that, there are some things that we do feel reasonably positive about. Firstly, the new Prime Minister's innovation statement, while certainly not a cure-all, I think is an important sign of the government he intends to lead. $1.1 billion does a great job in starting us talking about innovation and starting to enliven the Australian economy with new businesses. It was fantastic to see Atlassian, the Australian software company, debut on the US market and have a market cap of $8 billion, notwithstanding the fact that it only started about 10 years ago. It's the engine that will create jobs and future industries. And we certainly want to make sure that we're positioning our clients to benefit from that. So while we look forward to 2016 and expect that it's likely to contain even more challenges than perhaps the last 12 months have delivered, the important thing is looking at the longer term. And I know we say that often, but when you look at the numbers in terms of the probability of getting positive outcomes from investments, the longer you have your monies deployed, the more likely you are to get the results you want. So on any given day, you're about a 50% chance of having a positive outcome from equity markets. And in a given year, you're about 25% likely to have a negative outcome across the course of the year. But when you expand that lens to 10 or 20 years, you have a much higher probability of getting returns that deliver what you need to give you financial security. So we'll be looking forward to 2016 to navigate the challenges that the economy and markets throw up, and also try and keep a sense of what the real meaning of the bigger picture is. I hope you enjoy a fabulous and well-earned break over the summer festive period, and we look forward to working together in 2016.